All right, so last night we had Iran news, and as you can see, it's reflected on the chart here. Here we have the 1 hour candle close. This was the 5 a.m. candle close, and we left this large imbalance. This is on ES, this is on NQ. As you can see, as we went into 10 a.m., even with the 10 a.m. candle close, we see ES was actually weaker here. On the much higher time frame, NQ is weaker, so they're both. You really could have taken either index. ES probably could have been better today. I ended up taking NQ only because I had a much clearer draw. So let's just take a look. And even here, this is where higher time frame is super important because right here we have this is the 10 a.m. candle close. We're struggling here on ES to get through this 1 hour inversion, whereas we actually inverse the overnight action here. But given the weakness we are seeing here in ES, I still thought we could roll over. Again, on the macro time frames, we are looking very bearish. So let's just take a look at what I was looking for now on the lower time frames. As you can see here, this is market open, and this is kind of the most displacive 5 minute candle we had of the day. So this is really what I was keeping an eye on. And not only that, if we take a look here, for a draw, we have these equal lows with not only a 5, this is also a 15-minute gap. So let's take a further look at the trade. So as you can see here, we left this 5 minute fair value gap, and that was really what I was looking at. I needed to see that get inversed. One thing that did make me a little nervy about this trade was the fact we never took out London highs. So I really need to see quite solid displacement through here, and the time needed to be right. And I was very, very patient today. As you can see, there's a lot of back and forth and just chop. This is really, really tough price action to trade. What time do we have here? So now we're coming to 10:30. So at this point, I kind of said to myself, all right, I'm waiting till we get towards 11 a.m. We usually see an influx of volatility around the 11 a.m. candle close. I wanted to see how price. So right now, this is where I'm getting interested. And it was this candle here. I put my limit order in. And this is where, on a day like today, where you see, look at these candles, it's very choppy. So you want to give your stop plenty of breathing room. And where I put my stop was above the wick here of this 5 minute candle. And as you can see, luckily I did, because even this candle back, this would have taken out a lot of people. And even I was like, oh, I can get a bit better risk reward. I was tempted to put my stop here, thinking above this and this wick high and this 5 minute would have been enough. It wouldn't have been. Thankfully, I had the sense to put my stop all the way up here. And my take profit was simply those equal lows I saw in pre-market. And that's a really strong draw, is to have equal lows with two unmitigated fair value gaps right below. And as you can see here, price went right to target, and now we're starting to see a bounce. It came right down to consequent encroachment of this 15-minute fair value gap, and now we're starting to see a reversal and an SMT with the S. Do I think we're going to go lower? Yeah, I do. But yeah, I'm really happy with today's trade. That's something I'm really trying to bring in. As I assess my June data, you'll see the one thing that changed. If I look at April, May, it was my number of no trade days. I had a larger number of no trade days. That was really my shift in P&L this year, was staying out of the market. Like, just realizing my model just cannot survive and chop. I'm just going to get eaten alive. And typically what I'm looking for now is for over a month for my no trade days to be 30% or more. And I'm actually trying to get that number much higher. So even if I look at the last, even this week, this is my first trade this week. I set it yesterday. I just couldn't get an entry model. As great as this sell-off looks here, there was just no 5 minute, there was no 5 minute BPR for me to get in on. And then Monday was nothing but chop. So I'm really, until I see something super A plus, there you go. That's why it's important not to be greedy. Unless I see something super A plus, I'm staying out. And my goal is, when I look at my data now for July, I want to see that I at least 30% of the days, preferably above 35%, 40% would be even better, of no trade days. I'm just trying to heighten my sense of discernment that I'm constantly asking myself why not to get in a trade. And that's what saved me today, because a lot of people got eaten up here. There's plenty of times. Here we had this break of structure. Here there was a 5 minute gap somewhere here. I think it was here that we inversed. If anybody had taken these trades, they just got eaten alive here in this chop. And I just stayed patient and waited for really strong confirmation. And it was this 5 minute candle here, which is the most impulsive 5 minute candle we had all morning. And it invalidated the most violent move to the upside, the most displacement candle we had to the upside. So, and we had a strong draw. So it was a beautifully framed trade. I didn't go in with a ton of size given the conditions, and I left my stop extra breathing room, because that was another thing I saw. Really, I did like a whole 6 month review, and it's clear I'm extremely strong at finding where we're going directionally, and too many times I've just got wicked out. I know it's a huge difference when you spread that over a year. If that's 5 or 10% of your trades you're getting wicked and it's going to TP, it makes sense to just sacrifice a little bit of R in a trade just to make sure you're getting those wins, you know? So today was a perfect example of that. There was plenty of places people would have thought they could put their stop, and I just went over the top. I was like, I'm going this full wick extreme of this displacive bullish candle, and thank God I did.